Well, good morning, everyone. Hope you're having a great day. Let's go ahead and make sure you all can hear me. If you would please type the number 1 in the chat box to let me know that you can. I would truly appreciate it. Nothing worse than talking to myself for the next hour or so. Hey, Brenda. Hey, Jeff. Good morning. Good morning, Will. All right, loud and clear. Appreciate that. Harder to see these words on the screen. Hey, Tim. Good. Glad to hear that. Thanks. Appreciate it. Kevin, good afternoon. Morning, Jim. You can hear me and see me. There we go. That's good because I want to be seen. All right. Well, welcome to this week's Power Hour. Hope you're having a good day. As we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance before ever taking on a trade, setup, or an indicator. Yeah. Oh, goodness gracious. All right. So we got a lot happening here, folks. Tonight is the Inner Circle check-in. This Thursday night, I'm teaching the Inner Circle. Mastermind group is on the 19th. That is tomorrow, 8 p.m. I'm teaching that as well. Monster Market Movers, Trade Watch Loads, Q&A, Trading You, all coming up over the next couple of weeks. Power Hour, Cover Call Explorer, E-mini are on a regular schedule, as is Power Hour and Trading Coaches Playbook. And we've added another training to the docket, which is Key to Be Free. Lee, can you drop that link in there, please, to Key to Be Free? Guys, do not miss out on this. I haven't taught it now in 8 or 9 months, maybe. Was the last time we went through, but a lot has changed as far as markets go. A lot has changed in the way we want to attack and approach things. We're going to cover a lot of that in there, go over some of the details of the individual trades, and talk about what it could be for you potentially to be free from trading, right? By using trading, potentially 2024, whatever it is, right? For some of you, you've been working on this a year, you haven't got it yet. So what? If it took you 2 years, 3 years, you'll be 2 or 3 years older, but you'll be there. You'll be achieving what it is you are looking for, right? Potentially. So go ahead, get registered for it. There's 4 different dates, 2 different times. They're all at 8 and noon. And let's see what we got. All right. So we got 2 links in there. Okay. So it looks like the same link, just in there twice. All right. Paul, I like your comment. I'd rather be obscene than heard. All right. So here is our follow us page. Make sure you go along and follow on the various social platforms out there. We've got multiple, things going out every single day on our trainings, on our social platforms. So make sure you pick those up. Here's the Trading Box Manifesto. You can download this right on any one of our sites. It's on the main wealthbuildershq.com. You can download it from robertjroy.com. You can download it from tradinglikeaboss.com. Each one has their own purpose of what's going on. If you're looking for whatever's happening right now in Wealth Builders, go over to tradinglikeaboss.com. Right? Which is where we have everything. So you can go right there, register for Key to Be Free. You can register for the Power Hour and Trading Coaches Playbook. Tons of free content on there. Do not miss the Trade with Rob stuff that's there. Right? Take advantage of that. I send trades out each and every week, but it's all about free. No, Jim. So we do not. So it's not a follow us page. We don't have a follow us page. But at the bottom of the screen, we've got Facebook, Twitter, Instagram, and YouTube. So you can get to those very easily there. But we need to update that. Lee, send an email to Sean, please, that we need to change those links at the bottom of the page and make sure to add some of the other social. And ask him to call me later on today about it. We'll see if we can't get on there, Jim. I think that's a great idea. Having something where that page is just there and someone can just go subscribe, 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 subscribe. Instead of having to go crazy to try to find different places. All right. Excellent. Okay. So let me bring us back into the presentation. So here's Key to Be Free, guys. I'm going to show you a 78% win rate from this year, right? And exactly the things that I'm doing to get there and the same exact things that you can do. We're going to talk about one strategy in particular, which is one of my favorite strategies of all. There are 5 in total that I use, but we're going to do a deep dive into one of those strategies which will give you a tremendous boost in just being able to potentially trade these, some of these on your own. All right, see if you can help Brenda there, Lee, if you would, please. Okay, so what trades did y'all do? Drop those trades in. I want to see them. I want to see them. We've got a topic today that we are going to cover, and we're going to cover it somewhat using the trade setup that I took today, right? And of course, everything we talk about is non-funded trades, right? So what trades did you all do? Drop them in. It could be today. You could have done them Friday. It may be something that you're still in, but go ahead and drop that in. So Brenda said no trades. Got a late start. Yep, I understand that. Today was an oversleep day for me. Hit the snooze button, which I don't normally do, and went, oh my goodness, why is my wife getting ready in the bedroom this early in the morning? And then realized that the sun was out. So that's not normally me. All right, so there you go. So Stephanie said, enter the bearish credit spread on the ZS. Good. How's it doing so far, Stephanie? Jeff said Tesla 60% in 1 hour. Very nice. Paula, no trades yet. Jim said didn't get in any trades this morning. SPY moved too much overnight. Yep, I agree. And that is definitely a concern, right? Which is why, and again, when we get into Key to Be Free, we're going to dig into building your list and some of that in there so that you don't get stuck in a place that there isn't something that you might potentially be able to take advantage of for trading. And I realized that the big move in the S&P today and the NASDAQ would have scared some people out that they did not take any trades, and that's okay. There's nothing wrong with that. To look at the charts and go, yep, today's not my day. I'll go do something else. I'll come back tomorrow. I got a day off. Hooray. Right? Don't need to trade every day. Right? That's quite all right. All right. Stephanie said just sitting there. All right. Good, good, good. So let me go ahead and let's bring up. We've had a lot of big moves today, right? But I want to look at Netflix. Okay. So I'm going to go ahead and let me bring this in a little bit. And I'm going to stretch it out just a little, not too much, just a little. So the candles are a little bit bigger. So you have to ask yourself, or you have to not ask yourself, you have to analyze the candles, the chart, based on what happened and how are you talking this out when you see it forming, right? Because if we look from a today's standpoint, right? We closed down here and we opened here. And that's all you had first thing this morning. Yesterday's candle and the opening price of today. Is it a good thing or is it a bad thing? Yes, it is a good thing or a bad thing, right? It just depends what it's doing based on the strategy you're looking to trade. What are you looking to capitalize on? What are you looking to take advantage of, right? And then what happened from there? We had a pull down. That was a little bit more than just we opened here, we moved down, and we moved back up. It didn't quite do that. Okay, we opened here and moved down and moved up, moved down and moved up, moved down and moved up, and then we took off somewhere in there. Okay, so we had a few 8 or 10 candles or so before we really got the takeoff happening in there. I have some form of support right here. I have some form of resistance right here. I've got a plan in place. I know how to attack. I know exactly what I'm going to do, and I know how I'm going to set up my targets and my stops on all of this. Okay, beautiful. Go. Okay. So what's the very first thing? You've got to look at how the position opened in relation to the support line. That 611.68. How did that option open, that stock rather, open up? Forget about the option because the option doesn't matter at this point. Is the stock doing what it needs to? If it is, then and only then do we worry about the option. And if the option doesn't fit, in other words, if there are no options with enough open interest to fit your risk profile, if there's not a time frame that you're looking for, if whatever happens that you don't like it, then you pass on the trade. You can go and look at a different strategy, right? If you don't want to do a directional trade, you could turn it into a spread where you don't need to worry as much as the open interest, as an example. But you can make the adjustments based on the trade, but you've got to know the trade of what you're looking to do. I am looking for the biggest bang for my buck, which will always be a directional trade. That's where I will start off first. I will turn it into something later. You know, could you have gotten some good news today on, I don't know, Google or on Apple? You haven't heard it, look it up, right? The great news, those two guys working together with something, right? With AI. Well, could that great news have been, yeah, I think there's a lot of opportunity there, but I'm going to play it longer term. I'm going to turn it into a spread, right? Whether it's a diagonal spread, whether you're going to do an iron condor on it, whatever it is, can you turn it into some different type of trade setup there, right? I will always look at the directional trade first whenever possible. So we have a 611.68 support line and a 624.63. The question is how? How did we react to those lines with our intraday candles? So let's go take a look at Netflix. All right, so I'm going to bring this in a little bit closer. Let's just get today's stuff on the screen. All right, we only really need today. So we closed, again, yesterday, Friday, we closed way down the R. That's our closing price. This was our opening price. Holy mackerel. Okay, big move up, okay? Well, when the day started off today on Netflix, where was I? My stock was in a bullish neutral bias. We were below the 8, the pink line, above the 21, the green line, right? We're in bullish neutral bias. Where was I until I saw the pre-market candles today? I was in position number 1 in the chair. I am way back here, just chilling, at least on Netflix, not that interested in it, right? Now, keep in mind, Netflix, guys, write them down. Netflix, NVIDIA, Tesla, right? My 3 top stocks still to this day. They have been for the last 8 or 9 months, right? My favorite ones of all in the market to trade are those 3. So I'm in position number 1. Then I go ahead and let me go here and change this. Let's format the symbol on TradeStation. Click the dots. 24-hour session. Yep, Roman said the only trade from me, my mentor, glad to hear you, was Netflix. Yeah, that was me today. This was my it for today, was Netflix. Okay, so we've got a 24-hour candle chart right now. So let's see what's happened. Right, so looking back, so if you notice, there are some different color candles. Right, from right here, that's my first. Look at that green compared to that green. Right, it's a different color green. Right, I don't like yellows versus blues and all of that stuff. Right, I just like red and green. So I got to look a little bit hard to see it, but it's okay. I like it. So this was all on Friday up to this date. This line. This morning at, let's see what time this was. Dark, 4:05 a.m. We got a quick little gap up. There was probably one trade that went off there. It was 100 shares, 100 share volume, 100 share volume. And we started to move a little bit in pre-market, right? And then we're up here to 609. We get some really nice move, big wick there. So lots of interest there. And then, as I'm watching these candles, we got the pop. So what's happening? In pre-market, right up to and including the candle before we opened, we were still below that support line. So we go back over to our daily chart, we were still below that 611.68. Right? So I'm still position 1 in the chair. I don't care. Okay? Well, when the last pre-market candle of the morning pushes up right here and closes, see it says 9:30 on there for that box for TradeStation. That's the closing time of that candle, which means the next candle was our open. We gapped down, and what happened? We gapped right down to that support line. Well, as we got our candle run up, massive candle right as we're getting ready to open, I went from position number 1 to position number 2, which is just sitting straight up now. No leaning into it, just straight up in the air. Okay? And now I watch, because what am I looking for? Just one simple thing. One thing only for me as a trader, the pullback. Right? Oh, but what about the breakout, Rob? This opened up higher and ran, and again, failed. Oh, but it worked, and you can take those trades. I'm not saying you don't. Remember, I have not figured out the only one way that you can trade the market. I have figured out that the way that works best for me is what I'm going to share with you. Okay, and that's why so many of you come back, because my system tends to work. Okay, so what's going on? We pulled back, and I'm almost like a villain in a kid's cartoon. Like this. You can see my hands, right? Yeah. It's like, all right, baby, come on. And we get our pop. I wait for my target for my entry into the trade. Boom, chakalaka. I'm in. Okay. Take the entry. Now, remember, I'm in position number 3 now, which means I'm leaning forward. We got that pullback here on position 2. We started to bounce here. All position 2 is this. Position 1 is back here. Position 2, I've moved straight up. Position 3, I'm on the front of my chair, hands on keyboard. I don't touch the keyboard until I get to position number 3. If I could set up an electric shock system on my keyboard, I would if I touched it early. I would gladly set it up. I would, because I have done it more times than I am willing to admit. Today's setup was perfect. Did it freak some people out? Yeah, we broke down on that wick then, right? Or came back down on this one. We had a big pull down here, right to the 21 moving average, the yellow line. And that bounce that came off of there was awesome, right? So that was the entry into the trade. But before I took the entry, I already knew exactly where my targets and my stops were going to be. And if you are truly interested to learn the methodology behind this, make sure you come to Key to Be Free. We're going to talk about all of those types of things there. But I'm going to show them to you here. Oh, yeah, I'm glad you're feeling better, Roman. I know I had I had COVID this year. My mom had COVID, and then she had the flu another time. And on top of that, she now has bronchitis, which is just killing me. Whole bunches would sell at the breakout. Yeah, and that's the fear, Les. You're exactly right. So the entry point was $1 off of this. So we're about 611.75 was the entry point. Okay. So our high here was 612.71. We were in on that candle, right? Which is the 940 candle. Now, what I'm going to do is I'm going to get rid of the pre-market candles now. I don't like them on the screen. They mess indicators up and the likes. So I'm just going to take them off for now. Okay. All right. So right in here. Okay. All right. So Paul, Brenda, both of you, where was the entry? That was it. So I was about $1 off of there. So about 611.75 was my entry. All right. Jim said Netflix. I think if you took the pre-market bounce off the 8 EMA moves, you did. Yeah. Well, and you could. So, Jim, that was the best part. We didn't just get one opportunity. Some traders are skittish in that first few minutes. If you have one of our day trading clocks, you see where the pre-market first pullbacks are and the second pullback is identified on that clock. And some traders are skittish to try to jump in on the first couple of candles. Okay. Oh, but Rob, we had a high here. I prefer to break out of that high first before. Listen, you've got your rules and you want to stick with them, right? But be open to other things that might work for you as well, right? Like this. So we got this breakout in there and we pulled back yet again, right? We pulled back, we closed right at the fib line. It was almost the whack-a-mole, you know, boom, boom, right? I love that. I mean, I see this one they're doing with a dog right now, where they've got a whack-a-mole board built that's like just 9 holes or something like that. And the guy's got a hot dog in his hand. And he's pushing it up from below and pulling right back. And the dog is going after trying to grab that hot dog. And whack-a-mole. It was a great game. But that's what it was, right? It pushed back down, and now we're looking for the bounce. Did we get our bounce here? All right, let's see. Our high was 613.5. We opened a little bit higher on this candle from where we closed. We pulled back. We bounced. Boom! Second opportunity to take the trade. Right, so it wasn't that it only set up, I missed it at 10 minutes, less than 10 minutes into the market. It set up, even if you missed it, it gave you another opportunity, right? Take advantage of it, slam down on that trade, and walk away, all right? Let me just get the questions here. Brenda said, why not wait until the breakup of the first 5-minute candle? You can, Brenda. It's just not my style. I don't wait for that. Because by the time you got in, now the question you have to ask yourself is this. Had that been the case, Brenda, if you waited for that to happen, let me do this one. This is the first wick was right there. You know what? That wouldn't work well. Nah. Let's do it this way. All right. So here was the high. On this candle, 114.32. Now you're up here, 114.57. You're in. You're above. 1 penny above, you're in. And then you had that big pullback and broke. How many traders would have gotten out of that trade? Right? Oh no, but Rob, I would have waited for it to go further above there. Okay, further above that. So now we were looking at 114.32. So maybe you're going to wait. I mean, 14.32. Maybe you're going to wait to 6.15. Right? Let me go find a 6.15. Just going to drop a line in there. It's easier to work it this way. Okay, so there's your entry. When you get above that 6.15, there's your entry. Now, Brenda, you just watched this big bounce on this candle and this massive candle breakthrough. Are you excited to take that trade at that point, or has it moved too far? Meaning the question in your head is, oh, but is this where it pulls back now? It's gone so far because you know what? My stop is still way down here. Can't change that because I chose to get it up here. And once again, I am not saying don't take the break above the first candle of the day. If that's your system, then you do it. I don't wait for that. Right? I have waited too long and I will not take that trade at that point. Right? I will pass on it there and just watch it run the rest of the day and miss out on it. Above the body, above the toenail, above the eyebrow, whatever you want to call it, Brenda. You can take anything you choose. I don't do that, is what I'm saying. You can take it that way if that, and I'm not saying you shouldn't. This has to be your system. All I can do is guide you in a direction. I'm not trying to force you to take a particular trade or take it a particular way, right? Roman took the same trade that I did today, right? And I'm sure many others between Mastermind and Inner Circle did the same exact thing, right? Because this is the system we teach, right? Let's see. Jim said Netflix 10:05 a.m. bullish candle had a confluence of the ADMA and the fib line, possibly get in there instead of the previous candle. Excuse me. Yes, and Jim, so again, I'm not saying a no to that. That's okay. We closed down here. We got the bounce. You got the break above. What I would want to be looking at, if that is our 10:05 candle, Jim, just keep my eye on the time here. I want to be looking at the 1 minute candle. Saying, okay, where is that 10:05 candle? Was it? So that was closing time, right? So, okay, closing time. All right, got it. Let's do it again. So closing time, 10:05. So here's 10:02, 3, 4, 5. That's what that candle looked like at that point, and it just ran. So we never got a pullback after that, right? So again, I'm not saying no. You just have to look at it as, because normally I would compare these at the same time, right? This should remain a 5-minute chart. This should be set up looking like this, and where I can see everything. So when the 5 is doing it on the far right of this chart, so is the 1, and I can compare them. From an emotional perspective standpoint, I've got a better review of what's happening there. Now we're going back and looking in hindsight because it's already happened this morning, right? Sorry, I love you guys, but I'm not going to give up my early morning trading portion so we can do this when the market is just opening up, right? Market's still open right now, okay? So yes, could you have done it there? Absolutely, if that's how your system calls for it. There's nothing wrong with it, Jim. I'm fully on board with it, right? I have a stop and I have targets. Again, I'll talk in more in Key to Be Free on how we set some of these. But that stop is down here. I got a red dotted line in there, 607.50. My support's at 611.68. So 7, 8, 9, 10, 11, about $4 stop. Oh, Rob, that's too much. Can I move my stop up? You can do anything you choose. To me, that would be a mistake. For me, why? The stop is the stop is the stop. We set it based on what's going on with the chart, not based on what my pocketbook looks like. If you look at this and say that's too rich of a stop for me, should I move it up? The answer is, in my opinion, no. Go find a different stock. Go find a different stock. Okay. We finally got the entry, and I've got a target up here at 622. I like whole numbers for GTCs. Market makers tend to find stops. People put whole numbers for stops. So they attack that number when they can see a person's stop loss. Oh, if I close all of this out right now, we're going to make X as a market maker if I just hit that. So let's move it to that price. So I like that whole number that the market maker might shift and move into that level. I'll take it. Right? It's an easy number for the market maker to attack with a lot of potential opportunity there that they may not see a stop in there. Could be a stop market that's triggering, but people tend to set them around whole numbers. So I set it at a whole number, okay, in there. And what happened? We had 1, 2, 3, 4 amazing candles. Fifth candle moves up, and notice what took place in it. And the trigger is pulled. The trade is over. If we're in this trade about 612 and a half, 612 and 3/4, 612 and 3/4. All right, and we're out at 622. So that's $9, 9.25. I need the pen, the pencil to figure it out. It's about 9.25, right? $9, $9. So it's a $9 move. If you had a 70 delta, right? 9 times 7 is $6.30. You got a 40-50 cent bid ask spread. You got about a $6-ish move, right? And we're not accounting for gamma. We're not accounting for, we wouldn't have to worry about theta burn. It was pretty fast. We didn't burn any theta, okay? So overall, it was a great setup. And now we're talking about being out of that trade. You get in the trade 10 minutes after the market opens, so 9:40, and you're out at 10:30. So 15 minutes later, 5-0, you're out of that trade. And did I have to take a little bit of heat? Yes. Am I used to that? Yeah, it's a regular occurrence. If I just turn this over to white candle, white drawing, if the entry was taken right there, right? What happened? We had already stretched down. We moved up. We stretched down again. Like Jim said, I love that it came and it closed right at a moving average, right? And then took off from there. Okay. So in this earlier area, right in here, that was a little bit of, well, I don't want to say worrisome, but that was the time that the biggest concern would have to be there is something going to happen? It's going to happen in that area, right? As we keep coming back, retesting, we break down, we're seeing a lower low, but we're also seeing the 8 moving average. Okay, so I am in position number 2 at this point as I'm watching this happen. Why? Because if I need to jump into position number 3, bad news comes out, market shifts, we get down close to my stop. I want to make sure that order is triggered, right? And so I'm going to be sitting in position number 2. Once we got this first breakout candle, I'm back in position number 1. I'm not scouring for more trades. I'm focused on what's going on. Now I can, because I've got this set up as an automatic. I don't have to be there watching it. But I'm back here. I don't want to touch the keyboard and do something stupid. You want to know the number one thing most people can do to improve their results in trading? When you place your trade, leave. Get out. Yes, leave. You are your own worst enemy. Oh, should I get out now? Oh, it went up. But what about now? And, look, it's down 20 cents where it was just a minute ago. I should have gotten out before. Oh, now it's down 40 cents. Out. You know, you're getting out for the wrong reasons. You're managing the trade the wrong way, right? We are our own worst enemies. Better off to set it, forget it, walk away. Yeah, but what if it goes against me? What are you going to do? If you're sitting there watching and it goes against you, what are you going to do? Oh, but if it drops just a little bit, yeah. So you're micromanaging your exits. So you set a target in there of whatever I had it at, 607 and 3/4, 607 and a half. You set a stop at 607 and a half, and it gets to 608. You're like, oh no, I'm going to pull the trigger now. No, okay. To save that little bit of money, there's a reason you set it where it is, right? Mine is a percentage of move that I anticipate. And based on that, I don't, you know, there's a very low probability, in my opinion, that it hits that. How low of a probability? About 22% chance. Yes, 22% chance that it's going to hit that level. Really? That's it. How do I know that? Because I have a 78% win rate. Only 22% go against me. Only. Right? 22% go against me. Right? So I know that if I do this 100 times, 22 of them are going to go against me. 78 should go in my favor. It's having comfort in your strategy. That's really what it all comes down to, is being comfortable in your strategy. Jim said the 622 line, the candles are bouncing all over it, like it stalled for a few minutes. That's exactly it. So once again, and I say this all the time, but I wish there were a way that I could just let you into my brain. It'd be scary. But if I could, what am I looking at? I am constantly in an internal debate between bulls and bears. What do I mean? So we're going to go with the furthest candle you can see on the screen right now, which is the red candle. I know you can't see all of it. There's no way to do this on TradeStation that I can figure out, right? So there's a red candle in there. The bulls are in control, right? It gapped up. We closed at support. The bulls are in control. The next candle, yep, the bears are in control right on the open of the morning, right, of that candle this morning, the second candle. And then we bounced up. Bulls are back in control, right? Bulls are in control again. All right, bulls are still in control. No, but we came down. I don't care. We came down to support. Right? Bulls are in control. Okay. Bears are trying to take back control. They're attempting it. Right? So if I were looking and I'm back in position 1 here, right? If I were here, well, I wouldn't be. Actually, I would be in position 2 already. And we broke down here, I would get back into position 1. I'm not ready to do anything right now. Okay? Next candle comes on, we break up. Well, who's in control now? Right now, the bulls are still in control. The bears were never in control. They are trying to take control, but they're not in control. We got that breakout candle. Position number 1, I am all bull at this point. All bull. All right, is that helpful? When I kind of walk through it that way, is it helpful when I go through that scenario like that, where I go position 1, 2, and 3 in the chair, bullish, bearish, who's in control, who's trying to take control? You can give me a 1 for yes or 2 for no. And don't worry, if you give me a 2, I'll just have Lee eject you, not a problem. I'm kidding. All right. Yeah, Brenda said I was getting hives in that area. Yeah, I understand. And that's part of it, right? Jennifer said, I agree. It's difficult to watch and be patient for the plan to unfold. Yep. All right. Very helpful. Yes, you're letting us in your head. I'm letting you in, but you're not in. That's what I mean. My chair falls over too easy, Trader Will. Oh, man. Yeah, that's one thing I do not skimp on since I use my office chair so often between trading, my other businesses that we own, office stuff that I do here and so forth. I do not skimp when it comes to an office chair. I go full out, higher dollar, don't care. And stuff that has long warranties. Because what I paid for this chair, I've already gotten in parts back. Oh, the arm is kind of pushed down a little bit, change it. The seat got flattened out, change the seat. The piston broke, give me a new piston. And that's what we've done. Both arms, the seat, and the piston have already been changed on this chair. And it's less than a year old. Paula said, why did you set your GTC at 622? Why do you use that as a resistance? So Paula, it's all based on what I do on setting up the chart in here on what my percentage of move that I anticipate to go up into that 622 or I go down. Now, I had a high on this candle here, which made me go a little bit less than that, right? Than even my line, but we were at 620. What was the high? 622.92. So I said at 622 and a half. We wound up being $2 down below that level ish, right? But I use that candle to help me guide some of that, right? But I do have very strict formulas on both support and resistance based on my trade setups. Good. Glad. Very glad. Okay. That was the only trade today, but how many of those do you actually need, guys? All right, folks, girls, guys, whatever, kids. Okay. So Jim said, I watched your market intelligence report Saturday. It was very good. Fib midpoint of the 0.500, the 54.73 level is what you're watching for the future -1 fib line. Right. Thinking outside the box, I like it. The 618 of the fib lines, here, let me do this. Very busy chart. Apologize for that. Nothing I can do at this point. Okay. Nothing I can do. If we would just get to the point of getting above 100 on our Fibit, meaning we trade more than $50 a day intraday, high to low on our wildest average true range, I could get rid of 100-point levels, but I can't do that yet. So what Jim is talking about is way up here. Let me escape this first. Way up there. Okay, it's actually not as way as I thought. So we have this brown line at 54.73. So Jim said, I watched the market intelligence report Saturday. It was very good. The fib midpoint, the -5, which is this right here, this 500, right? Not -5, but 500. It's a midway point between this black line and the next black line that's way up there. That's where I was going way out, was the black lines, right? Come on. There we go. So the next one is at 67.65 on the S&P. This brown line is a midpoint. Ironically, it has a confluence with the -1 on our current fib chart. All right. So you were watching for the future with the -1 fib line. So all of that's right here. All right. The 618 of the fib line is around 51.68. Oh, okay. So yeah, I don't have all of that, and I couldn't draw it. It would be very busy on there. But I see what you're saying. So if you put a 618 in there, Jim said it's 51.68. So let me unscrunch this. Let me bring this in a little bit. So 51.68. Okay. So what are you saying about that? The fib line is 5,168. I've got 5,189 line up there right now. That is what I'm watching. It is not closed more than one day above this line. Okay, got it. So yes, you are spot on there. Okay. So what Jim has done is he's taken my very big fib analysis where I mark on each index what the current fib numbers are in a Fibonacci number line series. Okay. So that 4181 is the previous. If you look for the last black line we passed up, that's 4181. Right. This brown line is the midpoint, 54.73. I snap those lines on all my major index charts. And I don't mean, we're not snapping a 5,000 line on the Dow. Not why is a $30,000 index have a $5,000 line on it? It doesn't, right? A $13,000 index, why would I have a 3,000 line or a 5? It doesn't, right? So the numbers that relate to that chart, to that level that they're at. Charles said, not as fast not as fast a move as Netflix, but Square had given a similar move. So I love Square. Yeah, there you go. What a great setup, right? It gapped up just a little bit from where it closed, stretched down. So the bears tried to take control. Great bounce. So I like Square a lot. It moves 350, 370 a day. So it's not that it's bad. It's very uber low priced as far as options go. Cheap is an understatement, right? Compared to a Netflix. But Netflix just has a bigger move, where this moves 9 to 29, call 30, just under 15, 14 and a half a day, give or take, right? So not too bad, right? So I've got a lot of opportunity there with it, but Square is a great candidate. You're right, Charles, didn't move as much, but still got the same or similar type of bounce. I was fixated on Netflix because I got exactly what I wanted. Yeah, Charles said I am cheap. Yeah, me too. I love cheap. Don't get me wrong, but I'm looking for that. It's got to be a good combination, right? I don't mind paying less money for food. I need it to be good food. I took my mom out for dinner. My family, we took her out this weekend on Saturday for her birthday. She just turned 83 a week ago, but with bronchitis and such, she couldn't get out. So we just got her out now this Saturday. So we took her out to a restaurant she wanted to go to. She'd been there once before. The food was good. Nothing wrong with the flavor of the food. Okay. But the restaurant that I am used to going to, we go to almost every week. We go to one restaurant. My kids hate that we go to the same place. We go back to the same place over and over. Why? The food is amazing. The portions are huge, right? There's always take home when we're done. Not only was there no take home, tried to stop eating bread. I had to have a piece of bread because there just wasn't enough food with the piece of chicken, cutlet parmesan that they gave me, right? The restaurant we go to, the plates are probably 13 inches long, and the cutlet is not only the full plate, it's doubled up in portions of it because it's two of them that they're over on top of each other, right? So it's the quality as well. That's what it comes down to. Netflix, the quality of that move, right? I like it. But again, nothing wrong with Square whatsoever. They work without a doubt, right? So we've talked a bunch about the S&P 500 already, guys. I love this stretch that came back today and got us out of that bullish neutral bias. It actually did give us a higher low. So those that did watch the Traders Market Intelligence report, you would have seen that from there what I was looking for to happen, and that was not for this low to become lower than that low. It did not. We got a gap up, and it put us right back on the path of lower high, lower low. And we've been setting that up. We've got our recent swing high on there. You could see that was back at 51.8926 on March 8th, right? 51.8926. I've got a dark blue line snapped in there. And I have a blue zone drawn with that 5,200 level. Just to identify that, hey, there's something else right up there. So do I expect we're going to stretch a wick in there, maybe pull back? I do. I expect on the next test, we're going to break through a little bit, pull back. I'm not saying we're not going to break out of it. I just think that it may hesitate inside of there a little, and I want to be prepared for it. I don't want to start doing this while the market's moving into it and going, should I draw a line here? Why? I don't know. My brain is all freaked out right now. So maybe if I put a line, I can go, whoo, and relax. Maybe. Let's get all that done up front before we get to the point of we're there. Okay? Meaning the stock has already reached that level, and now you're trying to figure out how to trade. Okay? Excellent. So how to trade the overnight candles. This was a question that came up last week. I said, send an email to support@wealthbuildershq.com. If there's a topic you would like me to cover in Power Hour, I will be happy to do that. I don't mention that enough. Probably need to make that a big deal at each and every Power Hour. But if there's a topic you want to see covered, send it in. Doesn't mean we will, right? Show us how to find the password to your bank account. No. Okay? But if there's a topic you want covered on trading the market, submit it. We'll add it to our list, and we'll make it fit when we possibly can. Right? I did add. Yep. So Jim, I added that in. Right. So the FOMC is on Wednesday, which will be interesting for the S&P, the SPX. Exactly. So I don't normally look at the economic reports. I'm going to try to start adding that in. I'm just waiting for some feedback if you guys thought it was helpful or not to go over the economic reports before we get into the S&P and the market intelligence report. All right. So, how to trade the overnight candles, right? So you've got to look at, again, you've got to look at what's going on your charts. If you want to trade the overnight candles, which, Jennifer, I think this was your question last week. Is that correct? I don't have the document open. When you guys send it in, they're going to put your name down as to who said it. Yes, okay. And so forth. So it was Jennifer. So when you look at trading overnight candles, so guys, if we go ahead and look at let's look at Google. Right? So big move on Google. Let's go look at so more not trading them, but understanding how to use them as a clue for the next day. So I don't really worry about what happens on the overnight candle for the next day. And that definitely takes me to a different place right now than I was going with this. So I don't look at them on Friday night for how to trade them on Monday. I don't look at them for Tuesday night on how to trade Wednesday, right? Not unless there was a news event around it, earnings or something like that, I might consider them, right? Trading the earnings, to trade the earnings, though, you're definitely going to want to trade futures versus the stock itself. So if the stock is announcing earnings in post-market, after the market closes, you could trade the NQ. It's the only one I ever do is NQ. I don't do anything with ES or YM or the Dow and the NASDAQ. The Dow and the S&P. I only do the NQ, which is the NASDAQ, right? There's only about a dozen or so is Trip in here. Yeah, so Trip, how many stocks are you at now on your list for the overnight trade, for the earnings trade? So Jennifer, I'm looking at this less, if we go back, just pick another day because Friday's a really bad day, right? I'm going to turn this into 15-minute chart so I could see more on the screen, right? Okay. So Gilgal might not be the one. All right. So here we had these overnight candles. We kind of went flat. We moved up. We went sideways. There's really nothing there. Pre-market, we've got nothing. Yeah, big move down. Okay, on that last candle, it's actually that was a 9 o'clock candle. Right, we had a quick little bounce. I am looking at, you see, Jennifer, when this came down to a support line here, 136 half, 136.50. When I see that, that is where I am more interested in than just we moved up or we moved down in the pre or post market. And I would prefer to see it in pre-market than I would in post. Because just because something happened last night, that doesn't mean that people's attention span didn't go away to something else today. Right? They're focused on what's happening now, but not focused on yesterday. It's almost yesterday's news, right? I don't care. That already happened. What have you done for me lately? What are we doing now? Right? How are we going to move? How's it going to break? What's my next steps from there? Okay. So the overnight candles, I look at them more as the pre-market than I do post. And I look at them, once again, if we go back to Netflix, the overnight on Friday gave me nothing because there was no news out on Friday about Google and Apple, right, working together. So we had nothing really there. We got the gap up, way dark early this morning. We pull back, we're back. And then we start getting a little bit of volume around 7:30 or so. You can see the body is a little bit bigger, right? And we start to see this moving up. Right now, same thing I said before, as this is happening, I am not paying a whole lot of attention because we're still below support. We could easily run into resistance like we did here and fail. And I'm okay with that. I'm fine with that. You know, I'll take that lump, right? I mean, of that happening because I'm not in this trade yet. I'm waiting for this candle to happen. I'm waiting for these candles to happen. All right, now these are 15 minutes. Sorry, let's go back to 5 now. All right. I'm waiting for this breakout candle. I'm waiting for this pullback. I'm waiting for the bounce. That's what I'm waiting for. If I get it, I get it. If I don't, I don't. I'm never angry if I don't find one. I'm never, ticked off about it. I don't look at it as I missed out on this trade. Nope. I'm okay with that. I have 6 monitors, plenty I could watch. The system allows me to put 2 more. If I'm willing to block this window that's on my far right here, you guys can see that beautiful sunshine coming in. If I'm willing to block that or cover everything else on the desk to the left, I could put 2 more monitors. But I could also open up my laptop, which is right to my left, or just to my left. And I have 2 monitors all the way over here on the left that are on my regular non-trading system. Okay, so I could have more monitors and watch more stuff, but I don't need to. Right? If you have at least 2 monitors, you're golden. The third one is awesome. Do you need 6? Nope. Does it look like the Starship Enterprise? It sure does. It's pretty cool when people come in and see it. Do you need 6? Nope. It's just a convenience. That's all it is. It's a convenience. All right. So let's see what Jennifer's question was. All right. So Trip said I follow. You ready, guys? Trip said I follow about 89 equities, but I only trade the top QQQ components 13 to 21. That's all he's trading in the aftermarket. But he's following because he's analyzing how they're doing and he's building a system out. Taking a system that we built in E-mini Think Tank when I was running it way back when, before Brandon was so gracious to take it over for me. And he's expanded on that to where we were only looking at 10 or 13 companies. He's looking at 89. Which is a fib number, by the way. Trip, is that the covered calls, or is that Will's asking, is that covered calls, or is that for the NASDAQ strategy, the earnings strategy? Jennifer said, why do we have the large spikes? It is industry / large buyers. So the pre-market does not necessarily point to the bias for the day. Not per se. Not per se, okay? It's a guide as to what's going on, but you saw what happened. The pre-market had moved up, and we finally got to move. But guys, you've got to ask yourself, if this was not pre-market and you were just running into resistance right here, you had a gap up. There's your gap up, and you just ran into resistance. Are you taking this trade as it gets to resistance? You might be doing a bearish trade, but I'm in a pure bullish bias here. I don't want to do a bearish trade. Right? So, and then I watch this pull back. I watch that breakout, last candle, pre-market, retest and bounce. Thank you. Prayers have been answered. That's the setup I'm looking for. It's what I practice. It's what I do. You know, I am not a person that watches a lot of sitcom. It just doesn't do it for me. Everybody loves Raymond except me. Okay. I'm not a fan of the show. I don't have anything against it. It's just not me. Right. My wife watches it, and I know she watches it so much. I know what episode it is just by listening, because we're in the same room. Right. I'm usually on my phone or my laptop open, but I'm there. And, you know, I could tell you, all these different things when they go to Italy, when they first met, and the mother showed at the house and she brought the lasagna, and the priest, because they didn't want this to happen, and bada bing, bada boom, and they were mad with the lasagna. I hate the show, and I don't hate it. It's not my type of show. But crime shows, like cop shows, Blue Bloods, SWAT, things like that, right? SWAT is a tactical practice to get it perfect. And that's what this has to become. Tactical practice to get it perfect. Right? You have to do it over and over and over again, a very specific way. And then and only then is it ready for you to put out into a live test, a live fire exercise, if you will. Okay. Trip said that is for all earnings strategies. NQ pops on the announcement, the run up to earnings, post earnings gap, and working on Tony's home run trade and Vegas spread trade. Got it. Okay. So that's his 89. Jim said you might answer this soon, but do you like a directional trade overnight or a spread? So I'm not doing a lot of overnight holds right now, some, but the market's got to be moving well. The position has to be set up perfect. We got to have a confluence, it's got to be in a true bullish bias. And I'll be more considerate of doing an overnight trade. So most of my directionals would be day trade. My overnight becomes more of my covered calls, my spreads, my naked puts, things where I have a higher probability of being right in the trade than just a directional trade. You got it, Jennifer. You got it. All right, we've got a few minutes, folks. Give me some symbols you want me to take a look at. Listen, was that, by the way, was that strategy, was it helpful to go through that? And I told you it was going to be my trade combined with this. Now, I didn't have that planned this way this morning, right? That just came out that, because I already had a plan on how I was going to teach this today. And I didn't need to go into all the things with it, for instance, because we had an actual example to do it with. Good. Lots of yeses, lots of helpfuls. Good. All right. So Trader Will's asking for Crocs. Let's go take a look here. Let me switch over the symbol grid. All symbols. All right. Sorry, I just got this wicked tickle in my throat today. All right, so I don't have a fib on it. I've got a channel that's done extremely well for us with that channel. Just look at how many times we hit, here's the original channel in here. Look at how many times we hit lines that had nothing to do with the original channel. Here, boom, boom, there. Yeah, a little bit there. All right, well, a couple times throughout there. We stopped here, pulled back, stopped here, pulled back, stopped here, pulled back. I mean, pulled back to here. We tag them over and over and over again. So the channel works extremely well for me. So we are in a nice little bullish move there. Well, again, I don't have a fib drawn on it to give you a better fib analysis. Yeah, I don't even know if there's a big enough move for a fib on this one at all. But that 129.80 is a nice resistance. And although this is a channel and it is not a Fibonacci that we've got drawn, the channel is drawn based on Fibonacci principles. So it still works the same way. Okay. This is our resistance. This was the 100% move that we had inside of our channel. Second here. Right. Sorry about that noise. So I'd like it above that 125.80 or 129.80 rather level there, Will. We've got room up to that 139.40 level. I don't know where your fibs align on there, but that's what I'm looking at for that. All right. So let's see. I'm gonna grab that first one there, Brenda, which is AMD. AMD had some massive moves to it, huh? And they've given almost all of it back. Right? Roman candles don't work well. They go straight up, they come straight down. I would much rather have had stair step to do up and down, up and down, up and down, up and down. Here I come, here I come, here I come. Right? So on AMD, Brenda, we're in the middle of nowhere. What do we got there? $19. Let's make this bigger. All right, so 85 to 95, 6, 7, 8 is 13. Yeah, we don't need a fib in there. So we're in the middle of nowhere, Brenda. So right now, I am in position number 1 in the chair, just chilling and watching because it's not setting up for me. We're also, if we stay where we are now, we'll end up in a neutral bias, and I'm not interested there at all. All right. Hope that helps. We've got QQQ. All right, let me pull the fibs out just a little bit. Oh, let's hit the undo button. All right, so and a couple of you have this in there, including Bill. So if you look at QQQ, just get this bigger. Okay, as big as I can make it. We're in a bullish neutral bias right now. We were in a neutral bias yesterday. So actually we're not. We're still in a neutral bias. You can't be bullish neutral until you're bullish. If we close in bullish territory above the 8, we would be bullish. If we close where we are, we'd still be neutral until we break out and close above the highest of the 3 moving averages. Not the highest number, meaning it doesn't mean the higher than the 55, higher than whatever the top, in this case, the pink is higher on the chart. It's got the highest price. We've got to close above that first. So I would wait for a close above the 8, retest and a bounce. We're barely at a 2 on this one, but we're pretty close as far as rank goes. All right. So again, hold off on it a little bit. NASDAQ's had a big pullback from where it was not that long ago. Okay. So then Kevin's asking for Tesla. All right. Tesla for a short. Possibly. Remember, they have earnings coming up now in a couple of weeks. So they're going to be an earnings candidate shortly for us. So we got to keep our eye on that. I would want it to break the Fibit first before taking it. So if we break the 168.5, retest and bounce, drop, we're looking at 167 or so. There's your bearish entry. 157 is support. 158, 159, somewhere in there is probably going to be your target. Right? And number 3 on my list is Tesla for me. Okay, so of my favorites. Love them very, very much. I got enough time for one more. Jennifer, we're going to grab, I already did Tesla, so let's grab NVIDIA. Loving me some NVIDIA. And I am happy that it has calmed down and pulled back. Do I think it's going to go further down than this? I think NVIDIA is a little bit overdone. I think maybe an overreaction taking place in there with the move that it made. But right now, we are sitting. I'm going to stretch it out, pull it back. Right? So the moving average is right about the center of the 2 fib lines. Price of NVIDIA today is not that far away. Right? But we are in, as far as price goes, a bullish neutral bias. Okay? So I needed to get above. So I would want this back above the 885.62 level, move back up, maybe 887 or so, 888, pull back, and doesn't have to hit it, but pull back towards the 885.62 and bounce. And if it does, then you look at a bullish entry. The only bad thing is we move about $40 a day, and we're looking at only $14 difference between where we are and the 100-point level. So that's kind of, I wish there was more room. I would pay a little bit closer attention to this one. Yeah, I agree. Will said, I wish they would split. Me too. Me too. I agree. They are getting a little bit overdone as far as price. Go compare them to a Costco or something, right? Which is closer in price to them. And Costco's a third of the price for their options, fourth of the price than what these guys are. So yeah, so they have their conference going today, right? So there's a lot of expectations. We saw some move on it already today with that. We saw a lot, the gap up was the move I'm talking about, and that run, and it gave it all back. We had to move up on Google, which was very nice. I'm very pleased to see that. Apple, I don't own at this point, but with what they're talking about using Google's AI, I might be liking Apple a little more than I did. That may be something. I was actually checking that right before we started today. So, but dig in, do your own research, folks, and figure out what it is. But I'm looking longer term on that one. So, for sure, probably a diagonal is what I'd look at there. All right, Lee dropped some links in. Key to be free, right? Or go over to tradinglikeaboss.com. It's right at the very top. Click on the link, and you can get yourself registered. You'll be good to go. All right, everybody, have a great rest of your day. God bless. I'll see you all on our next update. Take care, folks. We'll leave the room open. You can grab the links, and we'll talk soon.